Hi everyone, welcome to Strike, and we are going to discuss diffusion indicators, a very interesting tool to scan through what stocks are doing based on a single indicator reading. So, how this is different, and it's very simple to do, but not usually visible in standard charting indicators, because when you plot a standard indicator, what you end up getting is calculations on the price of the underlying security alone. So, if you plot a certain security and you put an RSI indicator, the RSI is simply taking the price of that particular stock and calculating the RSI. But a diffusion indicator tries to read a particular data point and runs that data point across an entire basket of stocks. So we could choose a basket, for example, the Nifty 50 or the Nifty 500, and run that data point across and see how all stocks are on that data point, and that then results in a diffusion indicator. So that is why it cannot be plotted in a standard way. In most software, it has to be calculated separately because you're running through a basket and you have to define what that basket is. So that is what we have done here. So when you look at the series of indicators here, they're basically running through baskets. So the first thing that you have to do top here is choose which basket you want to do. And the default is Nifty 50. You can switch to Nifty 500 or whichever other one you want to really switch to. You can even switch later on. So we'll see how that is done. And the first set here is whether stocks are closing above the 20 SMA, the 50 SMA, the 100 SMA or the 200 SMA. Now the 200 SMA or the 200 moving average is common among long-term investors. You might have often read analysis of how many stocks are closing above the 200 DMA or below the 200 DMA, and that's what this is. But the 20 and 50 are also common, and so you can actually run through based on what time frame you want to analyze. You can actually run through the one that you are really looking at. So here if I switch on to the 200 MA, what you're looking at Nifty 50 stocks that are closing above the 200 MA. But you might want to, for such a broad tool, you might actually want to switch to the 500. So if I switch to the 500, immediately calculate and plot you the 500, which will look slightly different because the time horizon is widened. Now, how do you really use these kind of indicators? Now, most of them will plot in a range, which means from a 0 to 100, because they are a percentage plot, which means if you have a reading here of 73%, it simply means that 73% of the stocks out of Nifty 500 are closing above the 200 SMA. There's this 0 to 100 range, and within that range, we have demarcated these overbought and oversold zones where we mostly have seen the indicator top out or bottom out. But every indicator, as we see, is used differently in a trending phase or a range bound phase. Say, for example, this is a bull market, and once you get a very high reading, you may see divergences, but the indicator can stay up here in this range for a prolonged period of time. And so we use a kind of trend line to define that range, and when it breaks down from this range is where the trend reversal is actually confirming to happen, that the market is peaking out and starting to distribute or head lower, because now here you see fewer and fewer stocks are above the 200 MA till it reaches the bottom end, which is the oversold zone. Now in a up down market, you might simply find that the indicators go to the top end or the bottom end and you end up getting a bottom or a top. But in a trending market, it can remain extended on one side. And again, what time frame are we doing this analysis on? So if we are using the 200, we're definitely looking at a longer term bottom here, and then after that we haven't gone back to an overbought zone. But if you look at, say, the 20, you'll find it gyrating from overbought to oversold much faster. Now see, again it switched back to the Nifty 50, so you can switch back to the 500, and so we're looking at number of stocks closing above or below the 20 MA on the 500, and now you'll see faster gyrations across the indices based on that. So this is essentially how you use it. You need to judge what time frame you want to study, and accordingly you will get overbought and oversold readings based on the setup or distribution ranges as the ranges break. Now the same methodology can therefore be applied to different indices, right? You want to find out, for example, how many stocks based on RMI, which is the Rohit Momentum Indicator, which we'll explain under the RMI section separately. But some of you may have heard about it. Essentially a momentum indicator based on the momentum cycles that are there in the market. Slightly different, a little faster than MACD, just to explain in short. But what we are looking for here, it is basically like any other momentum indicator. It gives buy and sell signals, and what we are measuring as I click on it, is the percentage of stocks that are giving buy signals at a point of time. So this again acts as a good near-term sentiment indicator. And what it ends up doing is, for example, you have Nifty 50 here, so it'll look for all Nifty 50 stocks that are giving buy signals. And when all of them are giving sell signals, you end up with a short-term bottom. So this indicator is more shorter term in nature. It doesn't have long-term implications. It explains to you short-term sentiment. Now we have a variation to this indicator under sentiment, which is also known as momentum swing, where we are not looking at the buy or sell signals, but simply the direction of the RMI, and that also gives us short-term overbought and oversold signals. So that is different. Here we are only monitoring the buy signals as a percentage, and that too can give us short-term overbought and oversold readings. Like you see here, an extreme reading being associated with this short-term top from where prices dropped for a few days. And similarly here you have a low reading, and then prices start to advance to the top end of the range. And so that's how it is used whenever you get these near-term extremes. We can also apply the same logic to MACD. How many stocks are giving a buy signal on the MACD? So this will of course look slightly different, because MACD is a different indicator based on moving averages, not price momentum, and it is also slightly lagged compared to the RMI, and therefore the readings are slightly different. We can then look at how many stocks are giving you a reading of an RSI being greater than 50. Have you crossed 50 on the RSI? We may add variations to this later. We can even say, okay, how many are overbought, which means only above 70 or below 70. But 50 is like the mid-range for RSI. And we are simply measuring if they stay above the mid-range, because in a bullish market, sometimes the RSI will simply gyrate between a 60 and a 80 kind of range for a period of time. So if a large number of stocks have a high reading, again, it tells you something. So that's the reading there. Some people like to use the ADX. And so ADX percentage of stocks with a reading above 25 on the ADX has also been plotted. So these are all diffusions, and you can, like I said, switch between the basket you want to really use. Another interesting angle to it is how many stocks are making new highs and new lows over different periods of time. So let's take 1 month, 1 quarter, which is 3 months, or 1 year, that's 52 weeks. So if you click on 1 month, you come to know the number of stocks that are making new highs on a month basis, which means on around, we'll say, 30 calendar days, but in terms of trading days, it will be around 21 trading days, right? Because there are holidays. So 30 calendar days, how many stocks are making a new high? And see, here I am saying how many stocks, not a percentage, and therefore this is not plotted on a 0 to 100 basis. This is plotted as a numerical, and what you'll notice that all the readings are green, because what we are saying is new highs, right? We are not saying anything else. So new highs can be anything from 0 to whatever that number is, not greater than 50, because that's the maximum number of stocks in the Nifty 50 itself. It would be unusual to see that all Nifty 50 stocks are making new highs for the month. I'm not sure it has happened, at least not in this time period of the data series. We haven't seen a reading of more than 20 at a time. Okay, so you can run the same query on a quarterly basis. Okay, so over 1 quarter, that is calendar days, or 1 year, out of 365 days, you take the number of traded days for that. You can also run and see how it is really behaving. Another way you might want to do is look at the net new highs. Now, what does net mean? Net simply means that we take the net new highs and the net new lows and take the difference between the two. So when I click on this, you'll find that unlike the first indicator, which was only green, because we are only looking at new highs, so it was a positive number, here we are looking at a difference between new highs and new lows, and therefore you get positive and negative readings because you're looking at a difference, and therefore you see reds and greens on this chart. A slightly different way of looking at the same thing, and it can be run on different time periods, quarterly or annual. So that's it with diffusion indicators. This is how we study another form of sentiment. It is like reading breadth, but you are reading breadth not just by looking at advances or declines, but you're also looking at whether stocks make new highs, whether they're giving buy signals, and so on. And that is why when you scan through something, across stocks, across a basket, we call it a diffusion indicator.